Right now, billionaires pay an average rate of 8% on their total income. 8%, that's the average they pay. Now, I'm a capitalist, but if you can make $1 billion, great. Just pay your fair share. Pay a little bit. A firefighter and a teacher pay more than double the tax rate that a billionaire pays. That's not right. That's not fair.
That was the president today unveiling what the administration is calling the billionaire minimum income tax as part of the president's fiscal year 2023 budget proposal. The tax targets the 700 wealthiest Americans. The administration says the new tax for the super wealthy, quote, would only apply to the wealthiest 100th of 1% of households. Those with more than $100 million and over half the revenue would come from billionaires alone. It would ensure that they pay at least 20% of their total income in federal income taxes. The tax is projected to raise $361 billion over 10 years. Economist Gabriel Zuckman at the University of California, Berkeley, estimates that the richest person in the world, Elon Musk, would pay an additional $50 billion in federal taxes. Jeff Bezos would pay an additional $35 billion, and Mark Zuckerberg would pay an additional $16 billion. Joining us now is Democratic Representative Katie Porter of California. She's a member of the House Oversight Committee and the Deputy Chair of the House Progressive Caucus. Thank you very much for joining us tonight, Congresswoman Porter. How will this tax work, since it's aimed at wealth as opposed to income?
So the basic idea here is that billionaires earn income that escapes the ordinary tax system. For most of us, $1 we earn is $1 that we put on our tax returns. But for the ultra wealthy, when they earn an extra $1, it's $1 that they're able to defer taxation on and set aside, often for decades or generations, and avoid taxation. So what this really does is just accelerate those taxes so that they're paid evenly as they are earned, which is exactly what happens to the rest of us.
But so this taxes gains, for example, gains earned in the stock market. We see reports all the time that people like Elon Musk, his wealth just increased by, a few $1 billion here, a few $1 billion there. But that's just happening on paper. That wealth could also go down if the stock goes down. So the wealth hasn't been realized. It hasn't been collected by selling the stock. So how do you get at what you're trying to tax here?
So you would simply look at what is their total realized income, the sort of normal income that the rest of us have. Then you look at what is their unrealized income. So what is the value of the stocks and bonds and liquid investments that they hold at tax time? And to be clear, those amounts can go up and down, but so can the rest of us, can have incomes that go up and down throughout the year. And we pay taxes on what we have at the end of the year, over the year, and they get in the phase-in at the beginning of this tax, they have up to 9 years to pay the initial amount owed. And then after that, they would have 5 years to make any additional payments. To be clear, this is a minimum tax. If you are an ultra-wealthy individual, and believe me, if you're one of these handful of people in this country, you know it. If you are one of the handful of people in that 0.01%, then this simply makes sure that you're paying no less than 20% of your taxes. If you're already paying 20% of your taxes in your income and taxes, this tax doesn't do anything to you. This is simply about making sure that we hit that minimum of 20%.
And it functions much like a property tax. The people own property, say in California, in your state. That property is assessed. The government decides we're going to tax it on a basis of the house being worth $1 million, say. So at some point, there has to be some kind of assessment each year of the wealth that is being taxed in this program. Does the IRS know how to do that?
The IRS definitely knows how to do this. We have a very skilled workforce at the IRS. We simply need to give them the resources that they need to carry this out. And when people say, well, you know, that money, that stock that they got, they don't have it yet. It could go down. Believe you me, they spend like they have it. They still have the asset. The value could go up and down. And remember, this applies to liquid assets. So you could sell a portion of the stock if you needed to be able to pay this tax. There's nothing that you're going to have to do other than simply pay on what you earn. And receiving those stock benefits is income. Believe you me, if you offered the average American, would you like some Facebook stock? Would you like a share of Tesla stock? They would understand that that is a valuable asset.
Our top tax bracket now is somewhere above $500,000. In World War II, we had a top tax bracket of $5 million. It has always been strange to me as these incomes and these wealth levels continue to explode, that we continue to hold the income tax top bracket down at this very, very low level compared to where the super wealth really is.
Well, but to be clear, one of the reasons that we need to approach taxation through this minimum wealth tax is that many of these people, with an army of very talented lawyers and accountants, and through very careful ways that they structure what they receive from the corporations or places that they work or the businesses that they own, they may not have very high regular incomes. They may get most of their pay, for instance, in stock. And that's why even if we raised the top tax bracket higher, and we probably should, it's hard to think about how high you would have to go to capture someone like Elon Musk or Jeff Bezos.
And they also have ways of borrowing against the unrealized returns in these gains that they're making, so that they actually have the cash to use without having, quote, on paper, realized the gain.
They absolutely have the means to pay these taxes, and that's partly why they're being given 9 years to be able to do so. The rest of us have to find that money to pay any tax that we owe by April 15th. This is going to be a 9-year phase-in for these folks to owe it, to pay up what they owe. And really the idea here is the rest of us, like I said, we earn $1, we put that dollar on the tax return. Just because the ultra-wealthy are receiving their income in a different form, they're receiving it in stocks rather than in cash, doesn't mean that what they're receiving doesn't have value, and it doesn't mean it shouldn't be taxed.
Representative Porter, we look forward to seeing you in a debate with a Republican who's running on the platform of the Republican Senate Campaign Committee, which is to increase taxes on the lowest income earners in America. Katie Porter, thank you very much for joining us tonight.
Thank you.